As Sinfonia celebrate their 5th year and relaunch as a risk-targeted investment specialist, we thought it was the perfect opportunity to catch up with Havard Tveit, Portfolio Manager for IFSL Sinfonia, to find out the story of the fund so far, discuss any challenges Havard has come across, and what the future is looking like for Sinfonia.
The Sinfonia funds were launched at a very challenging time into the markets. The funds were launched in the summer of 2008 as the financial crisis was coming to the forefront. Looking back now, the benefit from multi-asset class investment can clearly be seen. In the chart, we can see how equity markets fell sharply during 2008 and early 2009, a time when equity markets across the world fell more or less in unison. But as equity markets fell, bond yields also fell, causing bond prices to rise, offsetting some of the financial pain investors experienced in equity markets. Crucially, it is the volatility of the markets that determines the amount of risk taken in the funds. The more volatile the markets are expected to be, the less risk the funds will take. Despite the volatility of the early years, investors and their advisors have clearly seen the value of this approach and have entrusted us with more than £100 million. The most challenging period was managing the funds as the markets fell in 2011, as it was difficult at the time to see if this was just a wobble or whether it was a repeat of 2008. At the time, we had incredible uncertainty in the global economy, with governments and central banks already stretched. What would be the backstop to a declining sentiment? The US was debating the debt ceiling, Greece was struggling under a debt mountain, and the European banking system was stretched. The market reaction to these events can be seen on the chart. Equity markets selling off suddenly at the end of July 2011. After a volatile period, markets then performed well into year-end as worst-case scenarios didn't come to pass, and central banks, in particular the ECB, stepped in to support the markets. Current market conditions are not without the challenges. There is a pending withdrawal of quantitative easing, the US budget discussions, political uncertainty in Italy, and austerity still remains an ongoing issue in Europe. The long-term or strategic asset allocation is set using the historical volatility of asset classes and how they interact, along with our future return expectations for the markets. The volatility of the Sinfonia funds should stay consistent through time within their bands. Otherwise, the risk ratings will not be appropriate and clients may end up with portfolios that does not match the risk profiles. Volatility is backward-looking, so measures what has happened, not what conditions will be going forward. In managing the Sinfonia funds, our approach is to evaluate future events, look at market condition, and try to evaluate what impact this may have on markets and position the funds accordingly. An example of this is the summer of 2011. We had moderated the position in the funds leading up to the deadline for the discussions of the US debt ceiling and the continued concern about Greece, as this could have negative outcomes for the markets. As the markets fell sharply, we slowly added risk back to the portfolio as we felt market conditions were stabilizing and our investors would benefit from this. The funds are aimed at investors with a medium to long-term investment horizon. The funds are suited to a broad range of investors that do not want to adjust their exposure on a regular basis, safe in the knowledge that their money is in the hands of true experts. We are constructive on the medium term, but it will take some time before economies have been able to reduce their debt levels, so-called deleveraging, and economic growth will remain subdued during this period. At the moment, we think equity market looks reasonably valued, though we believe there is more value in European equities than in US equities. Following recent rises in yield, bonds look reasonable value, especially when we consider current inflation levels. We consider that there is some risk associated with the exit from quantitative easing, the fiscal debate, and debt ceiling in the US. In general, markets consider that this will be resolved without significant ramifications. If it's not resolved quickly, this could change the mood in the markets. But on the other hand, economic growth has returned to the Western world, though it remains weak, so policy mistakes from governments or central banks does pose a risk. Overall, growth is improving, consumers are feeling better about their situations, austerity is being reduced on the margin in Europe, UK growth is relatively strong, so we believe there are positive developments that may support the markets looking ahead to the next few years.
So as you can see, Sinfonia launched at a difficult time in the financial market back in 2008 and has ridden the storm of 2011. But the funds continue to perform well and have clearly benefited from diversification and multi-asset class investment.